You're tuned in to Agriculture Today, and we start our Friday show with the grain market update with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you. Thanks, Shelby.
As we begin our grain market conversation, I want to first touch on some macro issues we've seen. And Guy, what are those?
Uh, Look, as I always like to start off, we'll touch base on the U.S. dollar. U.S. dollar's a bit lower this week. It looks like it could drop below 107. That's off from a high last month when we were trading above 110. So that should lend a bit of support across the commodity complex as we watch that foreign exchange rate. The other thing in the macro area, I just wanted to touch base on dry bulk freight rates. We're looking as we're approaching a 2-year low on that. We're down to about 776, which that's a good thing that freight's getting cheaper. It helps helps the U.S. commodities compete where we're freight disadvantaged. The downside of that is I think it's a reflection of the poor health of the global economy, because not only is grain, it's an indication of grain exports aren't moving as much as we'd like, but particularly coal and iron ore on that. Surprisingly, U.S. exports have been fairly good as we move forward, even with the absence of China. But yeah, that freight index has come down. It's come down to levels when it drops below 1,000. I start to get a bit worried because it tends to be a leading indicator of global economic health. So that just sort of overlays the environment here as we move to talking into the USDA report.
And
And with
aluminum and steel had there's tariff activity internationally, so we'll see where that goes in the future.
Yes.
And as we have had our recent USDA WASDE report, talking through our different commodities as we usually do, and looking domestically first at wheat.
Well, the thing that's a surprise this week is domestically is a strong week of exports. We had 21.2 million bushels of wheat actually shipped out this that'd be all U.S. wheat for the week ending February the 6th. And for hard red winter, we had 4.2 million bushels, which is way up from where it had been. We're sitting at about it's pardon me, and hard red spring wheat 7.2 million. Other classes did well, so we've had an up and down path for wheat. And here in the WASDE report that was on Tuesday the 11th of February, no change in the U.S. projection for exports of 850 million. But so we have bought right now with 36 weeks, or about 70% of the way through the marketing year. We actually have bought ahead about 83% of the USDA's projection. So that's actually good. When you look at the actual balance sheet for U.S. wheat, again, the macro trends tell the story largely. 2 years ago, the 22-23 marketing year, 30.4% stocks to use, 883 prices. Of course, Ukraine-Russia war really affected that. Then the next year went up to 38.4% stocks to use, 696, still very, very high prices. And now with the wheat stocks to use up to about 39.6%, we're at about 555. So you've got large scale competition happening on the world stage. However, and Guy I'm gonna put this on a tee for you to hit, Guy. There's some concerns about different parts of the world in terms of being able to keep up the pace on wheat supply.
Yeah. Yeah, we'll shift to look at the world situation. Dan's expressing a bit of a concern of world supply. Just want to keep in mind world production was increased slightly by USDA as production was up just over 500,000 metric tons, taking it to just under 794 million metric tons. That's up slightly from a year ago, and that is a record production number. That said, things do appear to be tight in some particularly major exporting countries. We'll sort of run through that. We'll start out here with Russia. Russian production was forecast. It was unchanged. Exports also unchanged. This is for last year, 53 million metric tons. Production was unchanged for this year. However, exports were dropped 500,000 tons to 45.5 million metric tons. That's 10 million metric tons less than last year's record. Sorry, that was a production number. Moving on to Ukraine. Ukraine production forecast is at just under 23 million metric tons, unchanged from last month, but reduced by 500,000 metric tons to 15.5 on the exports. That's 3.1 million metric tons lower than last year. So combined exports out of Russia and the Ukraine are forecast to decline 13.1 million metric tons. And that's what I think is lending some of that support to U.S. wheat exports on that. Moving on to, let's have a quick look at the Southern Hemisphere. Argentina crop was increased just 0.2 million metric tons to 17.7, but they left exports steady. Looking at my friends down in Australia, their crop was unchanged at 32 million metric tons, and exports were steady at 25. So combined, Australia and Argentina, their exports are up 8.4 million metric tons from last year. So some of that we're losing out of the Black Sea will pick up in Southern Hemisphere. Moving north to our Canadian neighbors, they're basically unchanged, production at 35 and exports at 26. Now, the big swing, and that's on the demand side, on the Chinese estimate, it came in unchanged. Keep in mind, China's the second largest wheat producer in the world, 140 million metric tons, but imports were lowered 2.5 million metric tons down to 8 million metric tons. That's a 5-year low. So I've actually been quite happy that the U.S. wheat exports have been at least at the pace that they're at on that. Ending stocks, well, let me back up. Wheat feeding in China is estimated, it's down to 33 million metric tons compared to 37 last year. That's a drop in 4 million metric tons. So they're tightening up that premium for wheat domestically. World ending stocks dropping slightly to 257.6 million metric tons compared to 258 last year. A little bit tighter. That lent a little bit of support to prices after the report came out, but I think wheat was weighed on by corn and soybeans as we move forward. So do we want to shift on to corn here?
Actually, there's a couple of things I want to help supplement what you're saying. That when you look at the world wheat situation over the last several years, I know, Guy, you and I have talked a lot about what's happening with world exporters, what's happening with world importers as a group. When you look at the last 3 years for major exporters, 2 years ago, their stocks to use at the end of the year was about 13.9%. So, okay, got that. Then last year that dropped to about 11.6%. And this year projected to be about 9.85. So supplies for exporters are tightening up. We're not even through that last marketing year. And on the importer side, of course, it's a little more stable, but still declining. You got 53% stocks to use basically 2 years ago, about 50% stocks to use this year, about 48%. 2 years ago, then 48% this year. So even though the world wheat market sort of just limping along and not any great shakes, still you've got these key groups that are showing that things are tightening up. And on the overall picture, you still have world minus China stocks 21% 2 years ago, 20.6% last year. 19.5% this year. So I understand we're stable. We're not terribly worried. We don't have we have wars going on, but we're not really worried about what the impact they have at this apparently in the grain markets. But we are tightening up in that wheat market, and I just wonder where we'll go in the future. Guy, any thoughts on that?
Yeah, I think you said it there. Where that stocks to use on your major exporting countries is what's tightening up, and that's the concern, because that's where wheat supplies are that are readily available to the market. You can get wheat from those major exporters in 4 to 8 weeks, pretty much anywhere in the world. And when they get tight, that's when we get concerned. And the tanks starting to run down towards the lower side.
So
Yeah.
as we look at the wheat market right now, and for our wheat growers who have wheat in the ground, how maybe should they be feeling?
Well, I'd use a bit of patience at the moment. I'm cautiously optimistic. I wouldn't necessarily get any hurry to run out and sell some of that. I think corn's actually going to lead that wheat complex, and we'll get into reasons why here in a second. We're getting good moisture across Kansas, particularly here at the moment in the western wheat belt, with in the form of snow and ice and all that good sort of weather we've been having lately. But so that's keeping our production outlook a bit more optimistic.
I think their attitude is, in terms of production prospects, wake me up on March 15th, So then they'll see what they have in the field, and then our domestic issues will come in and impact that. The one thing overall, I know we're spending a lot of time on wheat. When you look at hard red winter wheat and stocks to use, last year we had stocks to use for wheat, and again for what we grow, hard red winter, 48%, and in this current marketing year we're projecting 57. So slower exports so far generally have left us somewhat awash in wheat and have hurt our market prospects.
We're cutting to a short break now on agriculture today, but when we come back from the break, we'll once again be joined by Dan and Guy as we continue our grain market conversation.